Hello and welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to use Altruist for the mega backdoor Roth solo 401k strategy. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Again, please chat them over now so that we can be sure to get to them all. Let's get started. Just want to quickly verify the audio. Thanks for your patience. Issues earlier. All right, as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. All right, so we want to dive in with today's topic, which again is how to use Altruist for the mega backdoor Roth solo 401k strategy. Let's first start out by laying the foundation with the solo 401k eligibility rules. So, in order to set up a solo 401k, you need to be self employed with no non owner, non spouse, full time W 2 employees. So there's really two parts of that eligibility requirement. First is that you need to have earned self-employment income. So that can be reported in different ways. So for example, let's say that you have an unincorporated business. You are an independent contractor. You're a 1099 independent contractor. Or maybe you have an LLC, but it's a single member LLC where the income just passes through to your 1040. So for someone in that scenario, earned self-employment income will be income reported on Schedule C of your 1040. Now let's say that you have a business that's taxed as an S corporation. It could be an LLC taxed as an S corporation, or a corporation taxed as an S corporation, or maybe a C corporation, an LLC taxed as a C corp, or a corporation taxed as a C corp. Earned self-employment income in that case would be income reported on a W-2 that you receive from your business, taxed as an S corp or a C corp. And then lastly, let's assume that your business is taxed as a partnership. So in that case, earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. So that's the first prong of eligibility, that you're self-employed. The other half, in order to be eligible, is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So stated differently, you could be a W-2 employee, your spouse could be a W-2 employee, but you just cannot have other people who are acting as full-time W-2 employees. If you don't, and you've got that earned self-employment income, then you're eligible to set up a solo 401k. And keep in mind, that's no employees working for any business owned by you or a spouse, if any. So ultimately, the solo 401k can be an ideal retirement plan for people like consultants, realtors, freelancers, and other small business owners. So that's what gets you into the game as far as being able to set up a solo 401k. Now, not all solo 401ks are the same. So, for example, if you were to work with your advisor to open up a basic solo 401k on Altruist's platform, it's not going to allow you to make mega backdoor Roth contributions. However, you can have the plan from a third party like my solo 401k financial and then have the accounts at Altruist. So before we get into the details of using Altruist for the mega backdoor Roth solo 401k strategy, let's first lay the foundation in our understanding of what the mega backdoor Roth is. So, mega backdoor Roth refers to a strategy to make contributions to a solo 401k. So, this is different from making backdoor Roth IRA contributions. Specifically, you would be making what's referred to as voluntary after tax contributions to the solo 401k, step one, and then step two, transferring those voluntary after tax solo 401k funds either to a Roth solo 401k or a Roth IRA. So it's a two-step process. So you need to have a 401k plan document, though, that allows for both steps. So if you were to open up a solo 401k account at Altruist directly, you would be using their plan documents, which do not allow for making voluntary after-tax contributions, and then the second step of converting to the Roth. But you can get your plan documents from a third party like my solo 401k, and then still open up the accounts at Altruist, working with your advisor. So the voluntary after-tax contribution limits are much higher than your standard Roth limits. For example, you can contribute 100% of your self-employment income, dollar for dollar, up to $70,000 for 2025 as a voluntary after-tax contribution limit to the solo 401k, assuming that you don't make any other contributions to the solo 401k, and assuming that you don't make any contributions to a 403b or none are made on your behalf either. So, in other words, if you've got that self employment income to justify it, you can make a $70,000 after tax contribution to the solo 401k. Now, it needs to go into a separate after tax account before it gets converted to a Roth. You want those funds to end up in a Roth so that they have the tax benefits of a Roth account, meaning the potential for tax free growth. But as you can see, that's 10 times what you can contribute to a Roth IRA. Moreover, unlike a Roth IRA, where if you make too much money, you're not eligible to make Roth IRA contributions. With a solo 401k, there are no income limits. So regardless of how much you make, you're not going to be phased out. You're not going to be prevented from making those solo 401k contributions. So that's what the mega backdoor Roth is in a nutshell. But remember, the key is that you have to have those plan documents that allow it. That's the minimum. Now, it's going to make sense to also work with a provider like my Solo 401k Financial that has deep experience in helping customers open up the requisite accounts, helping advisors open up the requisite accounts, and handling the ongoing compliance support as an optional free service. So number one is the documents. You need to have those solo 401k plan documents that allow for the after-tax contributions and then the in-plan transfer either to a Roth solo 401k or to a Roth IRA. Then building on that, working with a provider like my solo 401k Financial that has a deep experience in helping thousands and thousands of customers make these mega backdoor Roth contributions because it is a technical process. You've got to follow the required steps. It's a two-step process where you first deposit those funds into an after-tax account for the solo 401k and then move those funds either to a Roth solo 401k or Roth IRA. And when opening those accounts, they need to be opened up under the name and EIN number of the plan. So, as part of the onboarding process, we obtain a separate EIN number for the plan, which meets the IRS expectation. And keep in mind that this EIN number is separate and distinct from the EIN number that you might have for your solo 401k. Then also work with a provider that provides that ongoing compliance support as an optional free service, like my solo 401k Financial does. So even though the first step of making the voluntary after-tax contribution that doesn't need to be reported on the personal tax return or the business tax return. It's optional to report it on the W-2. For example, if the business is taxed as an S corp. So the first step, the contribution, the after-tax contribution, doesn't need to be reported. But the second step, when the funds are then moved either to a Roth Solo 401k or a Roth IRA, that does need to be reported on a Form 1099-R. And we handle that as an optional free service for our customers. There's an online form that clients or their advisors use to provide us the information we need to prepare the 1099-R. So the role of Altruist with these types of setup, with this type of setup, with these mega backdoor Roth Solo 401k plans, is to provide the accounts. So they actually have a separate account type. So again, if you or your advisor were to log into Altruist, you'll see Solo 401k as an account type, but that means you're using Altruist's plan documents, which do not allow for the mega backdoor Roth. But Altruist created a separate account type called retirement trust accounts. So that's the account type that you would use. So you would first obtain the plan documents. We would draft those plan documents within the same business day when someone signs up. Once the client or the advisor returns the completed and signed documents, we obtain the EIN number for the plan, and then that EIN number is used to open up the accounts. So, for example, the advisor would open up 3 different retirement trust accounts over at Altruist, with each one opened up under the name and EIN number of the plan. And based on experience and client feedback, Altruist will open up those accounts oftentimes within the same business day. Moreover, they have built systems to make it easy to fund the account. So from a solo 401k perspective, it's totally acceptable to make those contributions. For example, that voluntary after-tax contribution from a personal account or a business account. And with Altruist system, again, based on experience and client feedback, they make it easy to link an external account. For example, using Plaid, which is one of these systems or tools that are out there that allow you to link accounts at different financial institutions, such as linking your bank account to the retirement trust account at Altruist in order to fund it. So implementation with Altruist and My Solo 401k, step 1 is going to be just verifying eligibility, right? That's the foundation. You need to be self-employed with no non-owner, non-spouse employees. Step 2, work with a Solo 401k provider that offers a plan and has the experience in helping clients and other advisors make these mega backdoor Roth contributions. Open the brokerage accounts at Altruist. So we obtain the EIN number as part of that onboarding process. We'll share it with you and your advisor so your advisor can use it to open up those accounts at Altruist. Make the contributions, right? With our plan, it allows for diversification from a tax perspective. So some folks may want to first maximize their pre-tax contributions to be able to reduce their taxable income now for the year for which they make the contribution, and then make the difference, make additional voluntary after-tax contributions up to the limit, and then move those voluntary after-tax funds, step 6, over to the Roth account so that then they then can be invested with that potential for tax-free growth. And then lastly, let us know about that after-tax to Roth transfer so that we can capture the information that's needed to prepare the 1099-R. And of course, if you're also making pre-tax contributions, you would want to share that with your tax advisor so that could be reported on the personal or business tax return as applicable. And then lastly, just to highlight, one of the bonuses of setting up a solo 401k through my solo 401k financial is that it'll make the self-employed business or individual eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. And these are tax credits, not just tax deductions. So it's a dollar for dollar reduction in the individual's tax liability. So setting up our plan, we will automatically draft the plan to make it eligible for the tax credits. For example, if the individual sets up the plan here in 2025, not only would they preserve the ability to make all types of contributions for 2025 anytime until their tax return deadline for 2025 and 2026, the business tax return deadline. So let's say their business is taxed as an S corp. As long as they sign up here in 2025, that'll preserve the ability to make all types of contributions, employee, employer, as well as these voluntary after tax by March 15th or even September 15th if they file a timely extension. So that's not only one benefit of signing up here in 2025, but also they'll be able to start claiming those tax credits, the $500 per year for 3 years when they file their 2025 tax return next year. So that's going to more than offset our fees for the first 7 years. We charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. And that's a totally flat fee structure. So it doesn't go up regardless of the balance or the support that's needed. So here's a simple example just to illustrate the point. Let's assume the individual is age 45. They earn $250,000 of self-employment income. They may choose to simply skip making employee and employer contributions and just make 100% contribution up to the limit of 70,000 as a voluntary after-tax contribution. That's going to go into that separate voluntary after-tax account over at Altruist before it gets moved over to the Roth Solo 401k, or it could even be moved to a Roth IRA, where, like any Roth account, it's going to have that tax-free growth potential. In other words, when they ultimately withdraw the funds from the Roth account, if they withdraw the funds as a qualified Roth distribution, it'll be totally tax-free. So just again, to highlight the key considerations, you want to make sure you've got the plan documents that support the Mega Backdoor Roth feature. It's going to be important to convert those voluntary after-tax funds quickly to the Roth account. And based on experience and client feedback, Altruist certainly makes it easy. And the reason for that is that if you were to invest those funds while they remained in the voluntary after-tax account, any gains that accrue while invested in that voluntary after-tax account will be taxable. They'll be taxable at the time of the conversion. So most folks will just simply move over the funds shortly after the contribution is made so they can start investing via the Roth account so they can have that tax-free growth potential. Key consideration, again, is issuing the 1099-R. We make it easy. You just have to let us know. You can do it 24/7 on our website to give us the information we need to put the plan in the queue to prepare the 1099-R. Of course, maintaining accurate records, file 5500 EZ once the value exceeds $250,000. So this is another key compliance flashpoint that may not always be well understood, is once the value of the plan, including all the different sub accounts. If there's multiple participants, let's say you got a husband and wife both working in the same business, you would sum up all the different accounts and even add the value of any defined benefit plan that might be sponsored by the self-employed business to determine if you've met that $250,000 threshold. So once that threshold has been met, there will be an informational filing requirement that applies to the solo 401k. The name of that informational filing is referred to as a 5500 EZ. And we handle that. We prepare that as an optional free service for our customers. They just have to let us know, or their advisors let us know once the value exceeds $250,000, and then we'll prepare it, including filing it under the electronic filing system as an optional free service. So no additional charge. So again, just the mistakes, pitfalls, not having the right plan documents, delaying the conversions, exceeding the limits, missing the 5500 EZ. That takes us to the end of the slides that we wanted to share today. Thank you so much for checking out today's session. If you do have questions, please chat them over now, as we've got plenty of time to go through them. In the meantime, we invite you to our community. We have the largest community of solopreneurs, solo 401k owners with over 30,000 members, which means that we've got vibrant forums. We have a library of videos and webinars. So there's tons of ways to learn and to share the knowledge. It's not just for clients. All are welcome. It's totally free to join, and it's very easy to join. You can join quickly and easily at mysolo401k.net/my community. All right, great. We got a question. Thank you so much for bringing it, Deborah. You mentioned that people can't have a solo 401k if they have full-time employees. Can my spouse be a trustee of my plan even if he owns part of a company that has full-time employees? So the spouse can be a trustee of the plan, regardless of whether or not the spouse is an owner of the business or working in the business. Sometimes clients will have their spouse act as a trustee just to be able to have signing authority and help manage the plan, or it'll even make it easier in the event that the solo 401k participant predeceases the spouse and the spouse is the sole primary beneficiary. It'll make it easier for them to take over the plan. Now, as far as the issue with employees, that brings up an important compliance point. Now, the fact whether or not the spouse is a trustee of the plan is not relevant to that compliance point. So essentially, there are two businesses, I gather. One business owned by one spouse that doesn't have any employees, and then another business that is at least in part owned by the other spouse that does have full-time employees. So if those two businesses either constitute a controlled group or an affiliated service group, then the spouse will not be able to maintain a solo 401k because those employees, those non-owner employees that are working for the other business, if those two businesses constitute an affiliated service group or a control group, will be considered employees for purposes of any plan sponsored by the first business that doesn't have any direct employees, but they would be considered employees for purposes of analyzing whether they'd be eligible to set up a solo 401k. So in terms of the affiliated service group rules, that'll depend whether those two entities are interacting directly or indirectly, even in coordination with each other. If there's no interaction at all, directly or indirectly, then you would turn to whether or not the two entities constitute a controlled group. Now, whether they constitute a controlled group will depend on the specific ownership. So if the only related person is the spouse, and that spouse just owns a small percentage of that other company, then the two entities are not going to constitute a controlled group. And the fact that the spouse owns part of another company with employees is not going to prevent the first spouse from being able to set up a solo 401k. I mean, let's assume, for example, that the first spouse has a realtor business and they're married to someone, their spouse has 5% of a company with employees, but the two businesses are not interacting directly or indirectly. There's no other related owners. That 5% ownership is not going to prevent the first spouse with their realtor business from being able to set up a solo 401k. So it'll come down to whether or not the spouse, along with any other related persons, owns 80% or more of that other business with employees. If yes, then they will constitute, in all likelihood, a controlled group, unless you can fall within this spousal exception. So it can be a somewhat complicated scenario, but that's um, gives us a high level overview. If he just owns one third and there are no other related uh, owners of the other business with employees, then you wouldn't even meet the threshold for the control group rules. And again, you mentioned that there's no interaction. So based on the information presented, that's not going to present an issue. That's not going to prevent the solo 401k from being maintained by the business with no employees. And the fact that the spouse uh, is also a trustee of the solo 401k plan sponsored by the business with no employees, it's not relevant to this discussion. They can be a trustee. Hopefully that helps. That's a great set of questions there. Thank you so much for bringing it. If there are other questions, please don't hesitate to chat it over. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. All right, that looks like it's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.